we need to understand certain factors while we are trying to understand the price to earning multiple and the price earning growth multiple, that is the PG multiple. So your price to earning multiple is being impacted by three most important factors. One is interest rates, second is risk, and third is growth. The first two factors are quite interrelated. I'll make you understand that in the most simplest sense. अब क्या होता है, प्राइस टू अर्निंग मल्टीपल का फर्स्ट फैक्टर की बात करते हैं, इंटरेस्ट रेट्स. So when the interest rates in the market go up, the price to earning multiple tends to come down. That is, they tend to exhibit an inverse relationship between the price to earning multiple and the interest rates. Why? Let's try to talk about the DCF model of valuation, right? जिसको मैं स्टार्टिंग से एम्फेसाइज करूँ कि DCF करो, प्राइसिंग मत करो, अच्छे से कंपनी की वैल्यूएशन करो, मेहनत करो, कैश फ्लोज यूज करो कंपनी के एंड डिस्काउंट देम बैक टू प्रेजेंट टू कैलकुलेट द इंट्रिंसिक वैल्यू बाय द एंटरप्राइज वैल्यू. वो कैसे करते हैं, कैसे नहीं करते, सो दैट्स अ पार्ट ऑफ योर लाइक इन्वेस्टमेंट बैंकिंग कोड. बट द थिंग इज, what basically happens is, or the underlying premises that comes into place is that whenever you are trying to project the future free cash flows, right? A free cash flows कैसे निकालते हैं वो आपको सीखना है, ठीक है? You are dividing that by what? You are dividing it that by the cost of capital, right? So year 1 का future projected cash flows, year 2, year 3, year 4, and so on, and the terminal year per se, right? So you are discounting the future cash flows by a cost of capital or a discount rate, or simply called as WACC. Here WACC stands for WACC, weighted average cost of capital. So that is the expected return that the company shall be delivering to both the equity holders and debt holders per se, in nutshell, adjusted with tax, right? Because your debt enjoys the benefit of tax deductibility of interest, right? वो debt के पास तो रहता है ये benefit. अब that cost of capital, the way we calculate the cost of capital is by the CAPA model. Now, what is the capital asset pricing model? CAPA model is something that you have to find out. आप सीख भी सकते हो, right? तो उसमें your risk free rate or the interest rate plays a very important component in the calculation of WACC. If the risk free rate rises, your WACC का number will also rise. If the risk free rate falls, the WACC का number might also fall. So when the risk free rate in the economy, where the interest rates are rising, your denominator, that is your cost of capital, is becoming a bigger number. Assumingly the cash flows are same or they even increase, but these are getting discounted by a higher cost of capital now, because interest rate is the critical raw material to calculate the cost of capital. Higher denominator and a free cash flow ka numerator. At the end, once you discount and calculate the present value, you do all those XYZ calculations, the enterprise value will come down. And hence the value of the equity per share will also come down after your debt and cash adjustments. Now, if interest rates fall in the economy, the risk-free rate will fall, your cost of capital by which you are dividing the cash flows will also fall, and the valuation will boost up. And hence, your price to earning multiple will be high in such scenarios. The second factor is risk. Risk में क्या होता है? If there's a higher risk in the economy, people demand higher rate of return from equity investments and also from debt investments, right? Interest rate on debt and a hypothetical cost of equity upon the equity shares. That's not the actual return, right? Actual is ROCE and ROE. ठीक है? Cost of equity is the expectation कि equity shareholders कितना expect कर सकते हैं on their investment into that particular company or sector, right? So when the risk in the market is high, it gets translated towards the yields in the economy, or the interest rates in the economy. They will tend to rise, right? And once they tend to rise, the valuation will come down, the price to earning multiple will come down, and vice versa is also true. When the risk is less, the valuations will rise, and hence the price to earning multiple will also expand. Risk हो गया, interest rate हो गया. Third factor, growth. Growth is very important. I'll tell you one metric. From 2015 में क्या हुआ था ना? RBI, it started to target a flexible inflation system. Target flexible inflation system. तो उसमें क्या हुआ था कि अगर 2% की इन्फ्लेशन है, ठीक है, तो we can go 4% की इन्फ्लेशन है, a +2 और a -2. ठीक है, so they try to adopt a flexible approach to inflation targeting. So what happens when this kind of an approach is targeted? Your inflation volatility drastically comes down. When your inflation volatility comes down, your interest rate volatility also comes down. When interest rate volatility comes down, your growth volatility also comes down. So that's a series of events which tends to take place in the economy over a 5 to 7 year period, right? जब भी high growth होगा, the valuations will be high and hence the price to earning multiple will be high. And most of the times, lower interest rates tend to favor high growth stocks and higher interest rates tend to favor value stocks. There's always a fight between growth and values की बात नहीं कर रहे हैं, but just to make you understand in a nutshell, interest rates कम है तो it will support growth in the economy. For all of those who are well versed with DCF modeling, last में हम terminal year calculate करते हैं because it is assumed that 50-60% valuation or even more than that for many companies, especially for growth companies, comes from terminal year. So terminal year में when we calculate the projected cash flow, we divided that by cost of capital minus the growth rate, right? By using the Gordon model or dividend discount model per se. So cash flows पे एक certain growth rate apply करके we calculate the cash flows in the terminal year and divided by the difference between the cost of capital WACC and the growth. So when the WACC is a bit coming down and the growth is rising, interest rates कम हो रहे हैं, right? In denominator, growth बढ़ रहा है. That spread between the interest rates and growth will come down, and your denominator will be a smaller number, and as the valuation will get boosted up. So growth always has a positive relationship with the price to earning multiple, right? अगर हम price earning growth multiple के बारे में बात करें, ठीक है, like PG multiple के बारे में भी हम बात कर लेते हैं. Risk and interest rates have a same relationship as a P has with the interest rate and risk. उसमें कोई difference नहीं है. But growth में क्या है? With that growth factor, your price earning growth multiple or the PG multiple, it tends to exhibit an inverse U relationship. Inverse U relationship. Single U नहीं, inverse U. So initially when the growth is high, the price earning growth multiple will rise. It will reach some inflection point, a peak of that U, and then it will start to come down. As higher and higher growth comes into place, it will reach that inflection point. The growth will keep on rising, but the price earning growth multiple will come down. Because आपके denominator में EPS CAGR का number बढ़ता जाएगा, तो price earning growth घट जाएगा, गिर जाएगा, right? So these are some important factors that we need to understand in terms of the price to earning multiple and the price earning growth multiple.